Audits. And what causes an audit? Well, I'll just sort of give you an overview of how audits happen. Audits happen when people make up numbers. There's a thing called Bedford's Laws, and it's the use of numbers, and people fabricating numbers have a habit of using certain numbers over and over again, and it shows up in Bedford's Laws. If you're using rounded numbers where it shouldn't be round, that could trigger an audit. If your industry code for what business you're in, you're claiming less gross income than other people in that industry, it causes a little flag to come up. There's a series of flags. If you live in an expensive area code with a low income, that could trigger an audit. If you flipped a property, CRA routinely checks the public record, says who's buying and selling properties, and if this property came up in your name, it's not your principal residence, or your principal residence changes on a frequent basis. Every 2 years you change your principal residence, and every 2 years you sell a property, and every 2 years you make the profit on it. Or if you're in real estate and you happen to have sold a property and made a really good profit on it, and you might think, oh, it's just, well, I claimed it as a capital gains, everything's all right, but CRA is going to look at it and say maybe it was an adventure in the nature of trade, and as such the profit was 100% business income. So property flipping, buying and selling, could trigger an audit. And wild fluctuations in income could trigger an audit. And the area code, your nationality, they're all factored in. Now, but always remember this is how it works. There's no such thing as a random audit, because CRA would go broke on that one. So let me see. They flip the rotary wheel, the roulette wheel, and out comes John Smith. John Smith is 80 years old and living off his pension, and he has no other sources of income. And his area code is such that he lives in a lower income area, and they check the bank accounts and there's nothing in there much. John's not going to get audited. Audits happen from tips, a lot of them. Number one source is disgruntled spouses, disgruntled employees, jealous neighbors, somebody resenting the fact that you're in the underground economy and not claiming your income. Somebody looks at, one of your co-workers looks at your wealth and all the things you have, and you make the same salary as them. They call the tip line, you get audited. If you make a mistake on your tax return that's just gross, that'll get you audited, because if you're sloppy, get you audited. You can look at your expenses. If they don't make sense, you can be audited. So my advice is, if you're going to file a tax return, make sure that it's well done, and look at it from the point of view of being cheap with how much you pay to get your tax return is a very expensive lesson to learn how bad that can be. You're better to go to the store and buy a retail tax package and do it yourself than you are to expect somebody to do your tax return for you for $50 or $100. Because that's all you're going to get. It's $50 to $100 worth of something that very well may be audited. The person doing your taxes might have had 2 weeks training. So if you're not going to pay a decent price and have a professional do your tax returns, you might as well do it yourself, and think about your return before you send it in. Does this make sense? Is my income correct? Did I cheat on anything? Does this make sense? Does it feel right? And do it honestly. The chances of you getting audited are extremely small for the average person. So, yeah, just don't be silly and think that you can make a lot of money and not have to pay tax on it. Remember, a tax liability is a sign of success, so be successful. Thank you.